have just come out, and Manglam Malu is in the studio in Bombay to take us through that.
All right, Arib, I cannot open the press release yet, but I'm waiting by for the numbers. I'll just watch out. I'll wait for the ticker team. We weren't expecting too much as far as the top line is concerned. The key number to be watched for ITC's numbers would have been the cigarette volume growth, but I think I can open the press release, and there you have it. Just a second. All right, the net profit has come in at 2380, which is a tad bit below our estimates. We were expecting numbers of close to 2490 crores as far as the net profit for ITC is concerned. 2380 is a bit of a miss, but we also need to know if the companies reported the numbers via Ind AS or the regular in IGAP, and we keep an eye out on a few numbers, I think. All right, we have the cigarette revenues with us as well, 85. It's 8230 crores as far as the cigarette revenues are concerned, and they've come in lower than our expectations. We were expecting a number of closer to somewhere around that 4500 mark. Just a second. All right, I'll await the flattest. So the standalone net profit has come in lower than our estimates, and the cigarette revenue growth has actually come in by 6%. So that implies a volume growth of 1.5%. That is indicative trends. Remember, the company never gives volume growths itself. They had taken a weighted average price hike of around 4.5% to 5%. So if cigarette revenue growth is coming by 6.5%, we can say that the indicative volume growth is around 1.5% to 2%, which is lower than what the street estimated, because we were working with a range of anywhere between 2 to 4%. Trying to get in some more details as far as other numbers are concerned. I think the press release is acting up a bit. As far as the other businesses are concerned, FMCG has posted a revenue of EBIT loss of around 4.5 crores, which compares to a profit of about 7.9 crores, a loss of around 8 crores. So that's also not very substantial out there. The FMCG business, though, has seen a revenue growth of around 7% coming in at that 2385 crore mark. We'll try to get in some reactions going, but as of now, it looks like the cigarette revenue growth is a bit of a miss. On the top line, the revenues have come in around that 13,253 crore mark, which is a degrowth as compared to the previous quarter, but it is a small growth as compared to the irrelevant quarter itself. And remember, the numbers are not comparable to our poll or the previous numbers, because the company has reported numbers on an Ind AS basis. We'll try and calculate the EBITDA as well. I think it's flashing on our screen right now. The EBITDA numbers should come up for you too. But looks like a miss, to be really honest, as far as the numbers are concerned, or the bottom line specifically, and the cigarette revenue growth. I guess, do we have any reactions going? All right, even if you look at the purchase, cost of materials consumed, no changes there. The excise duty has come in around that 3,200 mark, which was expected around 8% growth versus 3,072 crores going forward. Other expenses have to increase a little bit, a tad bit. Total expenses have gone up a bit. So EBITDA margins are should be flashing on our screen very soon. As far as the bottom line is concerned, it looks like a miss. The volume growth in the early indications are a little I mean, they are not very impressive. The standalone EBITDA ticker team tells us is 3526 crores. So 3526 crores would mean an EBITDA margin of closer to 132. I'm just trying to figure this out. So that's about 26.6%. Again, the EBITDA margins are also a miss. We were working with a number of anywhere between 28-29%. On an Ind AS basis, we were looking at a number, on an IGAP basis, we were looking at a number of 40, closer to that 39% mark. But 26.6% EBITDA margins is also nothing to be too impressed by. On a whole, it'll be very difficult for one to give you the exact analysis of the numbers, considering everything has changed on account of the Ind GAP or the Ind AS numbers. But as of now, it looks the initial reactions are it looks like a bit of a miss. Back to you, Arib.
Right, Manglam, thank you so much for all those details. In fact, since you say that the numbers aren't comparable, all we can do is work with the estimates that we have. And going from that, it does seem like a miss as of now. Net profit is below estimates. Cigarette revenue growth is below estimates. FMCG kind of seems to be in line, but again, shy of that mark. So let's see what analysts have to say. In fact, we're trying to connect with some of the analysts, and in fact, once we have some views coming in from there, we'll get a better picture of exactly how that.
All right, I think Ari, we have Sanjeev of ICICI Direct with us. Sanjeev, we've come in, got a Sanjay Manyar, we have the numbers. Sanjay, just about a 6% revenue growth as far as the cigarette business is concerned. What is your initial estimate of what the volume growth could be?
We were expecting approximately 1% kind of a volume growth, but we are not very sure. I think there's still some degrowth probably in these numbers. We don't know the volume growth number exactly, but if we calculate or extrapolate from the kind of a price hike they have taken, approximately 10%, we believe there should still be some degrowth. As far as the top line number is concerned, top line number is better than our expectation. However, bottom line is not is below what we were expecting. So there has been a 9.5% growth, what I believe, in the FMCG business, which is a bit of positive sign. But as I mentioned, it seems that there is still a degrowth in cigarette volumes.
All right, there's still a degrowth in cigarette volumes. So how do you read these numbers? Because the top line has come by purely on account of good performance in the FMCG sector. But again, on the EBIT margins or the EBIT front, the FMCG sector has posted a loss of around 4 crores. So what would you make of these numbers as far as the initial trends are concerned?
I think again it reflects that there is a good growth in probably in the FMCG side because the company has not taken very aggressive price cuts as most of the other companies have taken in the past. So what we believe still there should be a large portion in the growth should be volume one, and probably that reflect a bit of positive sense. However, we still need to look when the growth probably will come in the cigarette size. Probably in next few quarters we should see growth in cigarette volumes.
How much would you expect? Because if you look at it right now from a cigarette EBIT, the cigarette EBIT margins as well, quarter on quarter they haven't, or rather year on year they haven't increased by much, just about a 50 basis points increase. Even on the cigarette EBIT front, operational front, the cigarette margins have come in at 36.5% versus closer to that 36% mark in the comparable quarter. We understand that this is obviously optically lower on account of Ind AS reporting standards, but even if you look at it on a comparable basis, the cigarette EBIT has not grown by any more than 60 basis points. Is that a cause of worry for you?
I don't think it's a worry. It's a cause of worry because the company has probably taken they have passed on the entire excise hike this year, and this year the excise duty increase was not very high. It was 10%, which only required 6% kind of price hike. So what we believe, they probably have passed on the entire hike, entire excise hike in terms of price hikes, and there would not be a much growth in the EBITDA. Even if they would be able to maintain the cigarette EBITDA, I think we will be happy.
All right, and what would you make of the other businesses? Because if you look at the agri business, the revenue is coming at 2,800 crore or thereabouts, which compares to 2,300 crore. That is something that the street was working with also because of the favorable base. It was a 29 or 19% odd decline in the base for the agri business. However, even if you look at the agri business operational performance, there's a bit of margin degrowth out there. What would you make of that business? Even the paperboard and packaging business doesn't contribute much to the earnings, but revenues have gone down there as well.
Well, I think agri business is mostly a trading kind of a business. Right. But if you'll see the last year's numbers, probably you'll understand that because of the unseasonal rains, the opportunity in the agri trading was less. So a higher number is not a surprise this year, but still it's a good number. We don't see much agri business much contributing to the margins. As far as paperboard is concerned, if we'll see the other companies in the paper businesses, you would understand that the performance of those companies have improved. So similarly, we are expecting better margins going forward for ITC2, because again, most of the companies have been reflecting that the power cost has come down. So paperboard would probably see some change in future.
All right, but based on these numbers, what would your call on the stock be? Because it was a consensus buy, and tell you what, the volumes, the street was expecting anywhere between 2 to 4%. We were working with that poll. A lot of the analysts that I spoke to were expecting anywhere 3% upwards. So in that case, with the kind of earlier indications that the volume could actually be in the negative terrain, or if not negative, even flattish, what would your call on the stock be, considering that there is consensus bullishness on ITC?
So we still will remain positive on ITC because we think that this kind of a volume growth, which I mentioned, or volume growth rather than a decline, will come in the next 2 or 3 quarters because again the base is low. We are working on a negative growth last year in volumes. So certainly the positive growth should be there this year. And as I mentioned, the excise hike was not that steep as it was in last 4 years. So probably that volume growth will come into the positive territory, and we would be very positive. We are very positive on its FMCG business, as it is increasing its presence in almost every category now, and whether it is milk products or, for that matter, chocolates or even the juices. So there are a lot of new categories which has a huge opportunity. So we are basically positive on the FMCG side of the business.
Okay, all right. Thanks a lot for that. We also joined by Abneesh Roy of Edelweiss. Abneesh, what is your early call on the numbers so far? Top line 8.3% below estimates. At the same time, cigarette revenue just 6.5%. What are your early inferences of what the volume growth could be?
Yeah, so on an overall basis, sales, EBITDA, PAT, ITC results are in line with our expectations.
Right.
Cigarette volume growth is around 3 to 4%. So it has definitely improved versus the 0% growth seen previous quarter, and negative for the 12-13 quarters in the past 12-13 quarters. Mostly it's been negative except the flattish. So we are now back to 3 to 4% volume growth. So which clearly is a positive development, and that's coming on the back of the lower tax excise hike this time. So we are positive. So FMCG has recovered smartly from 5% growth. It is 9.5%. Agri business also, wheat exports have really done strongly this time. It's a 20% growth. And paper is a function of overall FMCG volumes and cigarette volumes, FMCG volumes for the industry also. So that has disappointed. So net cigarette is what drives, and FMCG to an extent also is important. But cigarettes clearly it's a decent performance. 3 to 4% is we were expecting 2% volume growth. They have done 3 to 4% volumes.
All right. There's a bit of a divergence on that because we also have Sanjay Malyal of ICICI Direct with us, and he reckons that the initial trend suggests that the volume growth could actually be a bit of a negative there, from flattish to negative. The jury is still out.
Yeah. The question is to me?
Yeah, Abneesh.
Yeah. So it's a 3 to 4% volume growth. Yes.
Oh, that's what you think. Sanjay, would you concur with that view? Because earlier you were saying that it's probably flattish to a negative volume growth there.
No, we don't know the number as of now, but what we understand, the kind of price hike they have taken, approximately 10%, and there has been a 6% increase in the cigarette sales. So what we understand, it should still be negative, but as I told you, we don't know still the number.
All right. So before we leave, your call on the stock, Abneesh, how would you reckon the stock will perform in tomorrow's trading session? How would the street like these numbers?
So, not commenting on tomorrow because we have a longer-term view. From a longer-term view, we remain positive. I think the stock remains one of the most cheaper names in the consumer space. I think 3 to 4% volume growth is a decent performance. FMCG 9.5% growth is again a positive number, which I think will accelerate because now if you see the noodles as a segment, as a category is recovering, ITC has gained market share versus what it was pre-Maggi Nestle issue, and definitely juices and all those new businesses are also expected to do well. So we are positive from longer term, not commenting on the near-term performance.
All right. Sanjay, what would your analysis of tomorrow's performance, at least as far as the stock is concerned, would be then?
So we are positive overall on ITC. As I have mentioned also earlier that what we understand from here is that the FMCG business would be the main growth driver as far as top line is concerned. Cigarette, of course, contributes the major part of the profitability. So even if there is a regulatory changes or regulatory hurdles in future, probably the FMCG would be driving the growth for the future, and we are positive on the company.
All right. Thanks a lot, gentlemen. We'll also give it back to Arib. Now, Arib, the jury is still out on how the numbers are because one of the brokerages is saying that there could be a volume growth of almost 3 to 4%, while Sanjay from ICICI Direct indicating that the early trends say volume growth could perhaps be negative. We'll have to keep an eye out on that. The company does not reveal their volume growth, and this time they have reported their numbers in the Ind AS format. So by tomorrow, we'll probably get a lot more analysis on ITC. With that, it's back to you.